So a classic failed pattern that I want to bring up here is the US Treasury bond market. Here we're looking at the exchange traded fund, TLT, that tracks US Treasury bonds. Notice how the prior uptrend in place really could not be more clear throughout 2016. We're looking at a daily bar chart. Notice the consolidation within an ongoing uptrend with momentum in a bullish range, above an upward sloping 200-day moving average, higher lows, higher highs. This is clearly an uptrend. So this consolidation, this continuation pattern, symmetrical triangle, theoretically should have resolved in the direction of the underlying trend, which in this case is clearly up. But when the lower end of that range is breached, the market is resolving lower. So when a continuation pattern does not resolve in the direction of the trend and instead reverses course, that in and of itself is a monster signal. That's an indication to us that there are larger forces at work. Clearly, there is an overwhelming amount of supply if a continuation pattern in an uptrend cannot continue. So this is a huge signal. We want to be selling this stock if we own it. We want to be shorting this stock if we're not in it. As usual, after the breakdown, you get that kickback once again, that former support turning into resistance. It doesn't always happen, but it happens a lot. So we want to take advantage of that. If we miss that short opportunity on the break, maybe we're out to lunch, maybe we're on vacation, and we come back, we want to look for that kickback, that last chance to fade it. And I think this TLT chart is a great example. So next we're looking at crude oil, also consolidating within a range after already being in an uptrend. We're looking at a daily bar chart of crude oil futures. We bottomed out in early 2015, started to rally, and then consolidated sideways in a descending triangle, in a symmetrical triangle. But notice how it came within the context of a downward sloping 200-day moving average. Notice how momentum was in a bearish range, not getting overbought, consistently getting oversold. As soon as this consolidation resolved to the downside, as opposed to the upside, as continuation patterns tend to do, that in and of itself was a signal to sell crude oil. If we were long crude oil, we need to get out. This is no longer an uptrend. If we weren't in crude oil, this is the signal to get short. One of my favorite examples of continuation patterns not continuing and instead reversing is precious metals in early 2016. We saw it in the gold miners, the actual stocks themselves. We saw it in gold, silver. But today we're going to take a look at gold. We're looking at a daily bar chart of gold futures. In this case, this is the exchange traded fund, GLD, that tracks those futures. And gold is coming off a major downtrend. You can't see it here because it's a little bit closer up, but this had come within a multi-year downtrend in gold. We have a nice little consolidation. This is as clear of a descending triangle as descending triangles get. The resolution in this pattern should have been to the downside. This is a classic continuation pattern within a very well-defined downtrend in gold, but the resolution was to the upside. That in and of itself is a signal. Once we broke out to the upside, any bearish thesis that we may have had in precious metals is now over. This is a buy all day. As usual, once we breach the upper end of that range, there's that kickback, that classic one more opportunity to get involved. So if you're on vacation or you were busy doing something else, or maybe you just missed the opportunity on the initial breakout, you had plenty of opportunity to cover those shorts, enter those longs, get involved to the upside because something has changed. When the continuation patterns do not continue and instead reverse, that's the signal that we're looking for. Another beautiful pattern where a traditional continuation range resolves in the opposite direction is in euro yen. Here we're looking at euro yen. This is the euro versus the Japanese yen. In 2016, beautiful downtrend, lower lows, lower highs. Doesn't get more clear. Now we have a symmetrical triangle. We have a consolidation taking place after an underlying downtrend, range bound between two converging trend lines. The resolution out of this pattern should have been to the downside. This is a continuation pattern. Instead, we resolve higher. Again, that is the signal. When continuation patterns resolve in the opposite direction, the thesis needs to change. There's an overwhelming amount of evidence that the trend is no longer in place and it has clearly reversed. That's what we want to look for.